First off, let's start off with your word of the day as we see futures deep in the red.
Word of the day is dividend growth. And I know I hyphenated, but I did that for a specific reason, because I think too many people in this environment are going for the deep value, high yielding stocks. Here we're talking about dividend growth, companies that consistently grow their dividends.
All right, let's be instructive. So let's get to your pick of the day, because I'm assuming it's following the same theme.
It is ticker NOBL. That's ProShares S&P 500 Dividend Aristocrat ETF. And look, this year so far, anything that's been light Mag 7 has been outperforming. But even strategies like equal weight or the S&P 500 value stocks have started to crack. But these consistent dividend growers are actually up 3%, while the S&P's down 5% and up 5% so far this year, because while their prices have lagged the Mag 7, their fundamentals have not.
Yeah, I'm looking at the chart. The NOBL up, to your point, about 3 1/3%, while the S&P's down about 4% so far, at least since the inauguration, actually. That seems to have been a kind of a shift in sentiment. So I do want to ask you, it seems like people are piling into bonds and also these dividend-paying stocks and ETFs due to uncertainty, looking for income to come in. What happens if the sentiment shifts back to a pro-growth idea, that people think that the AI trade will work again? How does this ETF perform, and are the dividends enough to kind of provide enough income that the price action doesn't matter?
Well, the price action does matter, but what's interesting about these dividend growth stocks is they're not just about sector rotation. As an example, Coca-Cola, clearly a dividend aristocrat, up 14% so far this year. But guess what else is up 20%? IBM. So this is a balanced portfolio of consistent growth, and it's the middle of the style box, which means that even if we are surprised to the upside that a lot of this uncertainty clears up, that doesn't mean you'll be left behind in the dust.
All right, what about bonds? As people are looking for income, what's your view on bonds, especially short-term treasuries and things like TIPS?
I think right now we've had the bond rally that can go about as far as it's gone absent a recession. So that does mean that, particularly if there are some tariffs, there is risk of a sell-off on the long end of the curve. So I think you got to have a little bit of a barbell right now. You have to have short stuff where you need that income now and where you need stability. But you still need some long duration in case we do have a recession, because if we have a recession, the long end could go to 3%, and you'll at least make 5 or 10% on those long duration papers.
You know, recession at the top of the mind of so many investors and people in the market right now. Simeon Hyman, your pick for us today. The NOBL ETF is the Dividend Aristocrat ETF, actually outperforming the S&P year to date. Thank you very much. It's good to see you.
Thank you.